Rates could rise after being on hold since December 2008, but Mark Carney appears to play down the chances the UK will follow. America's central bank looks set to raise interest rates today, 7 years after they were slashed to near zero during the financial crisis. The decision by the US Federal Reserve will be seen as a sign that the world's biggest economy is back on track after the downturn, but it will also have global repercussions. Surging jobs figures and signs that underlying inflation is creeping back up all appear to suggest the US is ready to wean itself off the financial life support provided by the Fed during the recession. Fed Chair Janet Yellen said earlier this month that she was looking forward to a hike, which would be the first increase since June 2006, saying it would be a testament to how far the economy has come since the downturn. In the UK, a US move could be seen as clearing the path for a hike by the Bank of England, which has left rates on hold at the historic low of 0.5% since 2009. But in an interview with the Financial Times, Bank Governor Mark Carney appeared to play down the prospect of policymakers at Threadneedle Street following suit on a Fed rate rise. Mr. Carney had said in a speech earlier this year that the timing of a UK hike would come into sharper relief around the turn of the year amid the economic recovery on this side of the Atlantic. But in his FT interview he said the conditions for raising rates had not been fulfilled, despite the recovery continuing, with inflation remaining close to zero. In terms of overall growth, it's been there, but in terms of the cost developments, it hasn't been, Mr. Carney told the newspaper. A Fed move will have repercussions across the globe, including in emerging markets where there are fears that starting to turn off the flow of cheap dollars from the US will hurt investment. Stock markets have seen a turbulent start to December in the run-up to the expected move, with shares hit by weakening commodity and oil prices, against the backdrop of slowing growth in China. There may be anxiety that a Fed hike could compound the gloomy global picture. But there have also been signs that markets are ready to swallow an increase and that a failure to act could be seen as a signal of concern over the health of the US economy. On the eve of the Fed decision, the FTSE 100 index fought back from recent falls to post its strongest one-day rise since the start of October, adding £37 billion to the value of its constituent companies. Markets in the US and Europe were also ahead strongly.